Good evening, everybody. I think I'm live for the Sunday market breakdown. Gonna just double check today because I don't know what's going on with this live stream. I had some difficulty setting it up. I'm not in my usual spot. I am in an Airbnb. It is a family weekend that I booked away, and so I'm coming to you live away from the chaos of all the kids and everything that's been going on today to do the Sunday market breakdown. Never miss one. So that's what we're going to be doing today. It does say that I'm live and that I've been live for the 38 seconds. So if you guys can see me, hear me, and all is good, let me know in the comments. I'm just going to give it a few minutes, as I like to do, before kicking everything off. Cool, everybody goes crazy at once. That's great. Hi, everyone. DP made it. Fantastic. Burrito89 says, hey. Jolt, hello. Good evening. Diane, good to see you. Hello. Chanad, good to have you on, man. And yeah, also, this is my... Wait a second. This is my microphone stand for today. So go easy on me. This is Airbnb style. So yeah, today, if this is the first time you've ever joined me for the Sunday market breakdown, I will just hop over to my wonderfully prepared Notion document here. It tells you exactly what I'm going to be doing today. So first of all, this is what I did last week, and it helped me a ton. So I want to do this in less than 20 minutes. Last week, I'm going to continue the theme. If I can do this in 20 minutes or less, we get sushi tonight for the family. Otherwise, no sushi. So I'm going to tell you my name. Hello, my name is James. I'm a Forex trader. And if you don't know who I am or anything about what I do, the simplest way to kind of recap that is just to tell you that I trade mostly the Forex markets, but what I'm most known for is trading the levels-based system, which means I trade predominantly just from levels on the chart, which today I will go into what a level is and a very quick rundown, as I say here, how I trade in 60 seconds, which I believe everybody should be able to tell you how they trade within 60 seconds if they're a trader. And and then show you some live examples of the trades that I took this week. I got to tell you where you can learn all this for free. So let me get over to that right now. If you go to school.com/leveledfx, the link is in the description. You will find Leveled FX membership. It's completely free. Anybody can join this. What I do over here is I have a classroom. This is why I love the school platform itself, is that it combines teaching, an educational platform, along with a community where people get to, hang out together and post questions. And, I think a lot of the time in, especially the Forex space, as well as other industries that are, let's say, make money online, with the direction of that, they tend to have like a course for sale, and then there's no way of actually speaking to the guy who made the course because they're put on a pedestal and they just use customer support to answer questions about refunds and whatever. But what I love about school is that there's no real running away from it. The classroom that I put together here is for anybody who has never even traded before. There's a Start Here course where I actually run you through exactly how to get set up. When you start trading for the first time, there are 1,000 different places that you can go and get your information, and it can be extremely overwhelming. So what I like to do with the Start Here course is, I wouldn't say dumb down the approach, but I skip over a lot of the stuff that I don't think is important to get started. You can always go back and learn why certain things are certain things, but you don't need a finance degree to be able to trade the way that I trade. I've been doing this for the last 5 years, 3 and a bit more profitably, and in the beginning struggled. And Leveled FX is all about what I struggled with and helping you overcome that, because I believe I struggled with mostly everything you can possibly struggle with that you need to get over as an up-and-coming Forex trader. And so that's what I put the most focus on in this class. And so, yeah, you can come here and learn exactly how I trade. It's 100% free. It's a growing community. We're at 676 members at the time of making this YouTube live stream. And so if you haven't done already, get yourself over to school.com/leveledfx. I mean, we've got guys in here like Ben, who's posted 7 out of 7, 100% win rate this week. And if you look at my trades, I also took 7 trades this week, and I also had a 100% win rate. Oh, good catch. I told you my mic stand is not the best today, but actually, let's do a bit of this. There you go. I feel like Freddie Mercury. So, 100% win rates, it's not a brag. It's a real thing. Everybody is skeptical in the beginning. If you are skeptical about my 100% win rate, of course, I do take losing trades every now and again. Everybody does. But I don't have a very large risk reward that I aim for. And that's kind of like, I suppose, the one of the things you could criticize my approach by is that I don't mind negative risk reward. I don't aim for a big risk reward, like, some trading strategies will get you to not take a trade unless there's one. If you're risking 1%, the idea is that you will make 3 or 5% from each trade. And then what they'll tell you is that, if you can have a 50% win rate, so you're basically wrong half the time and right half of the time. And because of the risk reward, that is why you will ultimately become profitable. The challenge with this is, let me just hold my microphone, make sure it doesn't fall over. I'm extremely professional, as you can see. I'm a YouTuber at first. I'm not. I'm a trader. I'm trying this old YouTube thing because I'm amazed by how many people find me on this. And I get amazing feedback from everybody that's here. Chanad, I just took 5 out of 5, I think. That's a 300% win rate. I'm not sure how your maths work, man, but I'll go with it. But yeah, it's a high win rate. So what I was saying there is, about the risk reward. The problem is being able to trade that way, you need to be an absolute machine. I found that when I started, I really didn't like taking losses. Nobody does. But specifically, what I struggled with most is dealing with the losses. It created a lot of negative self-talk in my head. And I just found that I started to dislike trading more and more as I took on more and more losses. And regardless of whether I had a 50% win rate or not, like, you just feel like the thing you're doing is broken, I find, if you're taking on a lot of losses. Whereas the way I trade now, the win rate is so high. And if you don't believe me, you can go ahead and join school.com/leveledfx. You can even see posts from members in there where they're just saying, I was skeptical at first, and that's totally fine and totally normal. I get it. But the caveat is I don't have huge winning trades. I just have a lot of small winning trades. Big enough to be worth taking the risk to get involved, but small enough to be having a very high hit rate. So anyway, that's something that you can go and do. Everything that I teach is for free, but if you do want extra help, let's jump over there again. You can actually join the paid community. The paid community is also available to you every single day. I'll show you on the calendar. I do a live call, as you can see here. So Monday, I've got 2 daily analysis calls. I do the London session, New York session, and then I alternate the rest of the week. So Tuesday is also London, Wednesday is New York, London, New York on Friday. And the reason I do that is to cover all time zones. So we've got people in here from Australia, from New Zealand, people from the US, people from in between, from Europe to the Asia, Philippines, Malaysia, people from all over the world. And it's really, if you just want a little bit of extra help, I believe that anybody can achieve the same kind of results as me. I don't talk about my results a lot, but I don't think that in trading, your success comes from taking bigger risks and having a higher risk reward from the trades that you take. I think the financial success in trading comes from scaling your capital. So what I like to do in the group is I have this thing where I want to make 100 funded traders over the next 12 months. Deadly serious about doing that. Obviously, I don't control the pace and who gets funded exactly. There's a lot of variables, like how many people find me, find my content, how many people actually apply themselves, how many people are in a position where they can dedicate themselves to actually doing this stuff. You do not need a lot of time. Most of the way I trade is I spend about up to an hour each morning adding trades to my trade tracker. If you don't know what that is, again, join Leveled FX. It's school.com/leveledfx. Link is in the description. And then I set my levels and I wait for price to get to areas of interest, and I place pending orders, and then I enter the market. And that's it. It's simple stuff. You do not need to overcomplicate trading. The problem is in trading is that nobody really knows who to learn from, and nobody really knows what type of trading best suits them. I think going for like broad brush, how can I get the most amount of people funded and the most amount of people making money with trading, is to teach them how I trade, because I feel like I had everything wrong with me when I started. And so therefore, if you follow my process and follow the approach, which is incredibly process driven, whatever challenges you're having in your trading, I will be able to break it down and pinpoint the exact point that you're going wrong, and we can fix it. Everything is fixable if it's tracked and measured, which is why I'm a big believer in that. So anyway, that's how I trade. Well, not how I trade, but that's where you can find out more information about how I trade over on the Leveled FX stuff. So that is, school.com. This is the premium one. This is school.com/forex-trading. You can see my browser is having some issues there, but it's all good. And you can see right now we are live on the Sunday market breakdown. There's also a free Wednesday call I do in here. Not everybody knows about this, but it's a midweek review. So 7 p.m. London time, I usually go live on Zoom, where you can ask me any questions and talk about stuff that you've learned in the classroom or any challenges that you're having based on anything that I've talked about in here. But enough of that. Let's get back to what I was going through here. We're coming up to 17:13, so I'm 13 minutes into this now. That's where you can learn this stuff for free. Also, I need to tell you that I'm a great guy and people actually like me, which I say tongue-in-cheek, but you get the idea. I'm not one of the bad guys, but you have to just take my word for that. There are actually a ton of really good testimonials I have, which I really should put out there and use more often, but I've just not got around to it. But I've had quite a few more of those come in over the weekend, which is really nice. But if you do want to become one of the 100 funded traders that I want to create over the next 12 months, Leveled FX, I don't think I'm not aware of a better place to come and do this. And I say that with every bias bone inside me, because obviously I made the thing. But at the same time, it's a community. I don't want it to be all about me. I want it to be about you guys. This is not guru model. This is it's not one to many, it's many to many. All of you guys are more than capable of doing what I do. What I do is not special, and every single week I show up here and show you the same old stuff. And the only reason that you're not doing this right now is because of two things. Either you believe that what I'm saying is complete bullshit, or you don't believe that you can do what I do, right? That's the only two things that can go wrong, because every single week I'm showing up and I'm showing you what I did in the markets and how stuff went down. How I trade. Let's just do this. I'm trying to get better at this each week, because how I trade is really, really, really simple. I don't know if it's better to show you guys on a chart like this. So let's say price can only go up and down, right? But price never moves one way in a straight line. So what we're doing here is we're mimicking price action, okay? So price goes up, price goes down a bit, price goes up a bit, price goes down a bit, price goes up, and then we have a stronger move in, right? And we have a pullback. And the pullback might be to here. All right. Now price is coming back down. I don't know if this is the best way to show you, to be honest, but price is coming back down and we've got a pullback. Right. That's what I'm going to do. So imagine this is a chart, and I'll show you a real life example of this, obviously with the trades I took this week, but I'm trying to find the best way to show you exactly how I trade. So now we need to mark up levels. So it's a little bit difficult in this scenario, but let's say that is a level up here and I'm waiting for a short on this. And let's say we've also got a level down here because, that's the wrong tool. We've also got a level down here because that's where price came out of. Right. Okay. And right about here is where we're going to be entering our trade. And this is where I'm going to be looking to take my first profits. And this is where everybody's like, oh God, how does this work? Don't worry about it. All will be revealed. Okay. So what I'm looking for at any time is a strong move into a level. Why do I want a strong move into a level? So let me use this arrow tool here, right? This is the red line. This is the strong move into a level of significance, okay? And we'll get into that in a sec. When price moves in a strong way into a level, this level is an area in which most traders who are on the other side of the market riding this thing up in a buy position, this is the area in which they are having to take profits. They have to take profits here because it's where everybody else is looking to take their profits. So it's kind of like a self-fulfilling prophecy where if everybody knows that this is where price is going to pull back from, that's where you have to take your profits from. And of course, it just adds to the momentum of seeing the price move in the opposite direction. So as we get the strong move in to a level, the other thing I'm going to look for is price to be overextended. So in a given day, price will only move a certain amount, usually within that day. So we use a tool called average true range. It is an indicator. It takes the average true range that a given currency pair or any instrument that you're trading, whether it's Bitcoin or the US 500, or if it's commodities like oil, or if it's metals like gold or silver, same thing. Everything has an average true range. So it takes the average true range that price moves over the last 20 days. At least that's how I use it. So it gives you an idea of like whether price is kind of coming up to the maximum it could probably move today. Now it can go further, of course. There are some outliers to this idea, but what we're doing is we're building an edge. So we're trying to make the highest probability of the price actually doing what we want it to do, which is to pull back. So in this case, we've got the strong move in to the level, and what I'm doing is I'm looking to get short as price is looking like it wants to go up in a very strong way. So I'm a big believer in doing the opposite of what everyone else thinks is going to happen. And usually that works out, not only in trading, but in life, I found. So when price moves in, that's where I'm looking to get short in this scenario. Where am I going to take my first profits? I'm going to take my first profits where price last consolidated before the strong move in. So in that case, it has to be in this region here, right? And then I might have a second area that I want to take profits. So this is where I will leave what I call a running position on my trades. I don't do this in every scenario, but you can absolutely do it. It helps with greed. A lot of people want to hold their trades for longer because obviously they make more money if they're hanging on to them. But I know from my own data and from my own research, I've done this for years, guys. I know both how I feel about the trade that I'm in and also how many times price does actually just hit the first area of potential struggle and reverse back the other way. So in this case, price has continued down, but a lot of the time, price can just come down here and then continue on up after it's made its pullback from here. Okay, so that's why I'm a huge believer in taking your profits at the first area of potential struggle, regardless of what you think might happen, because we don't want to do our thinking at the time of being in the trade. The thinking happens at the beginning of the day or on the weekend when the markets are closed. So just know that you should be taking your profits at the first area of potential struggle always, because what that does for your psychology is it keeps you free from being greedy. If your rule is to take profits at the first area that the price is going to struggle, you're going to have a really high hit rate, which is why the way I trade has a really high hit rate. And because it has a really high hit rate, my psychology or how I feel about trading is always good because I'm usually right. And what you'll find as well is that if you've ever traded before, if you're new to trading, but you have placed trades in a live market before, more often than not, you will be right about direction of price, but your timing is just awful, or you wanted to hold the trade for too long. And so price did go in your direction, but then it reversed and you were left with nothing and then draw down and then you end up losing. So just these simple things, like it's just something that I discovered over time, that if I just do that, first of all, no one ever goes broke by taking profits, right? So taking profits is always a good idea. And because it has such a high hit rate that way, it means you can be in the markets more and more. The only difference is people who have small accounts and not much capital always want to do the system that has the high risk reward, meaning that if they risk 1%, they will make 3%. And that's to them a faster way of being able to grow their capital. But with prop firms, what you can do is you can just learn to trade. And if you learn to trade and you trade the way that I do, you will actually find that you're able to pass challenges relatively easy without even thinking about it because your hit rate is so high. So that's what I want to get more and more people doing, is understanding that if you just learn the skill of trading and learn the discipline of patience and learn the discipline of being consistent with how you show up to the markets each day, like the prep work that you do before the day starts. Like I say to the guys in the community, like if you haven't planned the trades, as in you haven't spotted the opportunities at the beginning of the day, you do not have permission to enter the markets. You have to do that first so that you enter with confidence. So that way, you have to think, like, if something goes against you in the markets, you have to deal with that loss. And I find the best way to overcome any kind of loss in trading is to go over what happened and understand why you lost. And you can do this in almost any trading situation. There is always a reason why price smashes through a level, or the level that you chose wasn't very strong and you ended up getting smashed. There is always a reason. At least that's what I found. So, yeah, that's how I trade. We're at 23 minutes. I'm going to give it to myself that I managed to do all of the things that I wanted to in this. So to recap, my name is James. I'm a Forex trader. Welcome if you're here for the first time. Welcome back if you're not. I love all my regulars that I get on here. You guys are the ones who are making the most progress as well. I see it. I see every post. I may not reply to every single thing because I am a busy guy, but I do see every post that you guys make, and the progress that I see is awesome. Like, I still can't believe that it's only been since August, and we're now in the end of October, that I dropped the first free classroom modules of Leveled Effects, and almost 700 people have seen it now, and you guys, I get messages every week about how this is, how people can see that this is going to change their lives. I feel like the whole thing's in an early enough stage, though. Like, the thing with trading is it does take time. Like, you need to get out of your own way. Like I said, if you don't believe that what I'm saying is possible, you have to overcome that. And if you then believe that what I'm saying is possible, but you're a bit of a loser and you can't do it, that's another thing that you're going to have to overcome, because I'm nobody special. And I'll say that all day long. Like, anyone can do this if you just practice it enough. And so if the only reason you're not making tons of cash from the markets is because you're undercapitalized, just learn to trade and then get capitalized by passing prop firm challenges. And that bit comes real fast once you've actually practiced this stuff long enough. I'm talking, for some of you, a matter of weeks, some of you months. If it's taking you years, there are underlying problems that need to be dealt with. But if you come and join Leveled Effects and you follow my process, I guarantee you I'll be able to fix whatever problems those are. At least we'll identify what they are, and then we can begin fixing them. Only you can control whether or not you fix them or not. But I can point it out and be like, buddy, this is what you're doing wrong. This is the reason why Johnny over here joined 3 months ago and is now funded and making profits every month, and why you're still sat on the starting line because you feel like you're not getting anywhere with this. It's always your fault. It's always your problem. It's always something that you're doing wrong. But anyway, on that note, you just got to believe and accept that is the issue. So part 2, the meat trades I've taken this week, why I took them. We'll do a bit of a Q&A if anybody does have any questions. I do get a lot of guys joining on the regular. I do like to see people, new people here, not because I'm bored of you regulars. I love you guys. But I like people to ask questions. And I find there's 2 types of people that join and find my stuff. One is they're brand new and they came across a video and they're like, wow, actually, what this guy's saying kind of makes sense. And then they do ask a ton of questions in the chat. And then the other type of person is somebody that's seen my stuff over and over and over again. They know that all they need to do is follow what I'm saying, but for some reason, they just need me to tell them that every week. I get it. We learn through repetition. So if any of you guys recognize that in yourself, nothing wrong with it. I totally get it. But yeah, there has to be action from these breakdowns that I'm doing. It's the same stuff week in, week out. You guys know what you need to be doing. If you don't, get involved. It's school.com/leveledeffects. The link is in the description. I get almost nothing at this stage out of doing this, other than my own trading improves by refining my process and having to teach it to others. And I also get to stroke my ego when people tell me how brilliant I am and thank you, and this is wonderful, and hopefully changed my life in some way, because that is always something that is amazing to hear, and to be honest, it's one thing that really keeps me going with this stuff. So I show up each week to do this because of that. For those of the guys in the group know that this weekend was a big family. It was a birthday in my family, and so I flew from it's in Dubai to Portugal, from Portugal to the UK, where I'm in Cornwall, where I'm from. In St. Ives, for those of you that know Cornwall and have ever been here on holiday. Yes, there is sun, and yes, there are beaches in England, for those of you outside that don't believe it is possible. It is an island, so therefore we obviously have beaches. But the point is that this is a very busy weekend for me. It's been an incredibly busy week for me as well, but you can see on here I've still had trades in the market despite the travels, and the travels were actually on the days where I had the most trades. So Monday, Tuesday I took no trades, and Friday I also took no trades. So Wednesday I had 4 trades, and Thursday I had 3. I'm going to dive into what those were right now and take you through them, and then we're going to have a quick look at the economic calendar as well. So yeah, let's get right into it, because I don't have that much time today with everything that's going on. These celebrations are still continuing, but let's take a look. So here we've got Aussie CAD. And what happened with this? Strong move into a level. And then price went back the other way to where? The first area of potential struggle. That's literally it. So if any of you, if you've just seen my walkthrough of how I trade, the strong move into the level, price overextended. So this tool right here is average true range. All right, so if I take it off my chart, you can't see it. If I put it on, you can see it. Average true range just marks the point in which price has got to, that tells me that it's kind of getting to an area where it's going to be considered overextended. If price is overextended, it has a higher chance of pulling back. This is what you should be using in your trading. This is an incredibly good indicator. I'm not a fan of indicators. I do not like my charts to look incredibly messy. I'd prefer just to have one simple thing, which is the levels marked up. How I define levels is quite simple. I trade, I will say that I trade the daily and weekly. These are my daily weekly charts. The only reason I don't have everything entered on these is because I do actually really like using the 4-hour time frame to refine my entries. But what I like to know ahead of time is this a daily level or a weekly level? Weekly levels I put in gold, and daily levels I've got in the gray here on the daily weekly charts. These are my main charts. So a weekly level, what I do is I use the candle body close. So instead of the wick, what a lot of people do is they'll take this and they'll put a level, boom, on the wick like this. I'll put it in a different color so you can see exactly what I'm talking about. Let's make it pink, right? So this pink here, that is not a level. A level is the candle body close. Here you can see candle body close, not the wick, the close. That's the level, folks. So that's something that I do, I suppose, a little bit different. Here you can see we're on the weekly chart. Candle body closed. That is the level. And I'll show you time and time again how this works out. Okay. Let's see. So yeah, anyway, that's how I define levels. Aussie CAD was, let's get off the daily onto the 4-hour. Quite simply, this was the candle body close right here. The reason this one doesn't look as clean is because what's happened is price has gapped. So this was Wednesday, the closing candle, and then for some reason we've closed price here and then opened down here, which has created what I call a gap, and then the price gets closed the other way. But so when that happens, I refine it to the previous candle body close where price actually closed, not where it opened. So anyway, that was it. Price moved into the level. It was overextended. It did actually come down and hit average true range, actually, but then moved back to the first area of potential struggle. Why was that the first area of potential struggle? Well, let's have a look at what price did on the way down. So, as I said before, the first area of potential struggle, and I get this question probably the most, James, how do I define the first area of potential struggle? It is called the first area of potential struggle because that's what defines it. It's the first area that price is likely to struggle after it's made its pullback. So look, price came down. This is the 15-minute chart now. The reason I'm on the 15-minute chart is just to show you exactly what happened on the lower time frame, so it's more clear. Because if I just showed you a daily chart, this would just look like one straight bar. So price moved down, got within, let's say, 10 pips of the entry, and then pulled back to here. This was the last consolidation, really, before price moved in. Let's have a look at it on the 1 hour frame, see if makes any more sense. It's kind of like this here, right? So this whole zone, this is where price moved in, and then we kind of consolidated at this level. So I'm going to be picking a level within that, which I've defined on the 15-minute chart, just here, by this candle body close, as where I'm going to want to take my first profits. And as you can see here, price actually moved up. We gapped. There must have been overnight stuff going on here. Yeah, it was 10 o'clock London. Price moved up. And what happened? We hit that level. We actually hit the candle body close perfectly, if you see that. Where I took profits from is always a couple of pips before that, because I do not want price just to miss me for the sake of a pip, right? So I always go a couple of pips before, just like I do on my entries. And it took me out. Pulled back again from there, and then went a little bit higher. And then after that, I don't really care what happens. All right. So price came all the way back and then moved all the way higher again. And then we've had another sell-off from here. But yeah, that's how I trade. So that's the first trade that I took. That's why I took it. We had a strong move into the level. The other thing that I do, and is not really that well understood in the markets, is I like to do what I call a daily data capture. This is when I look at the day ahead and I look at what economic events that we've got coming up. So an example of this, let's go to the economic calendar. What are we on? 27th? No, so I want to go back to last week. So I'll go Sunday the 20th to the 26th. Apply that. So when I look at Monday, I can see that we have no high impact events for the day. This is just a Forex economic calendar showing you any potential up and coming events for the day. Monday, nothing. Tuesday, you can see here we had a speech, which I don't pay much attention to. So anyway, looking at Monday, I didn't take any trades this day, but I can see that we're not going to have anything that moves markets. So I'm going to say that the trading conditions for Monday are going to be subdued, meaning every level is going to work on the chart. So I can be more aggressive with my trading style. Whereas if, for example, this week, I know, and we'll get to this at the end of the live stream, because I want to show I want to talk a little bit about what we've got coming up this week. So the first Friday of every month is non-farm payroll, which is a big data release in the US. So where is it? It's going to be here somewhere. Hopefully I put the right week in. Thursday, Friday. That's because I was on Thursday. So there it is. Non-farm payrolls. This thing moves the markets like probably nothing else each week. So on Friday, I'm not going to be taking every level. I'm probably going to be waiting until after the non-farm payroll data is released. And when it is released, price is going to start moving very, very quickly. And when it does start moving very, very quickly, it will move very, very quickly into a level. And if that's a level that's overextended and we've moved into it in a strong way, I'm going to take a trade in the opposite direction. That's how I trade. Very, very simple stuff. But the difference is in market conditions, when we've got a very, very slow day, I'm more likely to take levels on the lower time frame, like the 4 hour intraday. Price may not even be overextended, but close to being overextended. And this is something that you just build up over time. You'll gain a bigger picture of like how price moves on a slow day and how price moves on a fast day. And this is what will make you a better trader over the long run. It's not something I can just, do a course about and you learn. It just doesn't work that way. What I can teach you is how to learn. And so that's what we're doing at Leveled FX. So hopefully that makes sense. If any of you guys have any questions about any of this stuff along the way, please just drop it in the comments below. DP, which I believe is Dave from the community. You just had a light bulb moment. Awesome. That's great. That's why I do these live streams. It's why I don't mind repeating myself each week and saying the same stuff, because there will be something that I say it in just a slightly different way, but I'm trying to take what's in here, get it out to you guys, because it's really like simple stuff. And you know, any one of you can do exactly what it is that I do in the live markets. There's nothing special that's going on here. All right. The only reason I'm able to make the type of money that I do make from the markets is because I've scaled my capital. I've grown it over time. That is literally it. The only difference to you know, me being able to live the way I do and not rely on other income sources to do what I'm doing. And trading is like, maybe I haven't said this for a while, so I'll say it again. It's the hardest way to make easy money, right? Like when you don't know, it's tough, it's hard, it's emotional, it's really stressful, it's pretty shit. But like anything, when you know how to do something, you would consider it easy, right? Everything is difficult until you know how to do it. So why not spend your time learning something that is worthwhile knowing how to do, right? Like you could, I don't know what other profession you could invest time into, but like this is something that you can learn on the side of your job or whatever it is that you do right now. And a few months from now, be in a much, much better position. A year from now, you'll be unrecognizable in terms of what you're doing. Like how I would see it is like if you're in a job and you don't have any dependents, like no one really relies on you, you're like, you know, in your young 20s or something, you can really go hard at this stuff. But if you're someone like me, if you have family, young children, you don't want to just jump into something like this. And so I'd always recommend putting yourself in a position where you're not reliant on trading income, because it's just going to stress you out and hinder your progress. So you're going to want to take things not slower, but have a more risk averse approach. Like have the income, have the job that you keep going, but build the trading thing alongside it. Because when you transition, at least the biggest thing for me is thinking about like how you transition from trading being a thing that adds extra money into your bank account each month to being the thing that adds all the money into your bank account each month. Of course, like over time, you'll diversify, you'll put money into other investments, and like it's not the only income stream I have today, but it's the biggest one I have, right? So when you transition from it being something that you do on the side to something that you do quote unquote full time, because there is no such thing as full-time trading. That's just like, that's how you lose money in the market, is if you're full-time trading, meaning you're on the charts full-time and just taking 100 trades a day or something ridiculous. So yeah, it's a psychological thing that you'll go through. And I just think the best way to transition is to always have multiple income sources. And that just means having more than one, and the one being trading. So anyway, that's that. I've waffled a lot in this, but I wanted to, I try and do these a little bit different each week, because it is the same stuff, but obviously there are new lessons if I deliver it in a slightly new way. So anyway, back to my trades. I showed you Aussie CAD, dollar yen short, 152.51 area. This is a real quick in and out 20 pipper. It was on the Wednesday morning, I believe, if I remember correctly. Yeah, so forget where 1 APS is on my chart here. Basically, the idea of this one is that price came in. Actually, let me just show you where the level's from first. Zoom out. So 4-hour candle body close. Look over here. Everyone can see, right? We've got a 4-hour candle body close. So price moved down. We had this volatility spike here. I'm not sure what went on exactly there, but that becomes a level for me. It's also a level because on all the other yen pairs, we have a similar kind of level on the chart in the same place. And so That was the level. I knew it wasn't a significant level, but on the day of entering this trade, I knew that market conditions were fairly subdued. So I could take it as a quick in and out. This isn't a trade that I'm going to want to take and hold for a long time. But as price moved in, we did get our reaction, and that's why I ultimately ended up paying off. But yeah, so, and also drawdown. Don't be worried about a bit of drawdown. Here we had a bit of dollar strength at the same time. What I'll do is I'll just pull the replay tool back here so we can see what went on across the market. So not only was this a yen move price in here, this same trade was on CAD yen as well. Let me just show you that. So we're on the 1 hour chart right now. As you can see here, CAD yen hit a level at the same time. This is something I look for. It's another confluence for me, that if you have the same of one instrument hitting levels all at the same time, so in this case, CAD yen and dollar yen and CAD yen hitting hitting a level at the same time. CAD yen was overextended pretty much on average true range. Dollar yen pretty much the same as well if we look at it. Where is it here? Go back to it. So yeah, exactly the same positioning, and then that's why there was a confluence there for me. So the price messed about on dollar yen, which is what I believe pushed up CAD yen as well for the day. We had this dollar strength coming through, and the dollar, this is the DXY, the dollar index. It's an indicator of the dollar's strength and weakness. So price moved up a little bit, which added a bit of drawdown to dollar yen. And as you can see here, later in the day, around 8 o'clock at night, is when we started to get the pullback, and then we saw the follow through the next day. So that was reflected on dollar yen as well, as you can see here. And it was also reflected across CAD yen. So you'll start to see this stuff happen over and over and over again. CAD yen actually played out very nicely, but the trade I took was on dollar yen. So again, when I see all of these things happen on one or multiple currency pairs like dollar yen, CAD yen, pound yen, if it's a yen move, I'm only going to be taking the one trade because I don't want to over risk. If I want to enter more trades or more pairs that I believe are the same trade, I will lower my lot size, and then I'll spread the risk. Like I could enter CAD yen and dollar yen, right? And instead of entering with 10 lots, I could enter both on 5 lots, for example. That's how I would look to mitigate that. But I prefer usually just to take the one. I don't like overcomplicating my trading. I've got other stuff going on. This week I was traveling a lot as well. So like do my morning analysis, come back on around the New York session, just have a check on things. My alerts are set, and if something comes into play, I'm going to execute on it, and that's it. So that was the dollar yen short. I also had a dollar, what's this, a gold long on Wednesday. This one was actually beautiful. I've been waiting on it for a little while. If I just show you this real quick. What did we have? We had, let's rewind price. Look at this, guys. So imagine we are Wednesday morning, right? This is what I'm seeing on my chart. So gold's up here. Average true range is up here. So gold could move higher. I've got nothing to go on because gold's at all-time highs. So I'm only looking for buys at this point. And this is only related to gold. Or let's say it could also relate to the stock market as well because we're at all-time highs with the S&P 500. Therefore, I'm only looking for buys because I've got data where there is a level. But that's all I've got. So I say to myself, if price comes back down here today, it will be near average true range. So if price gets all the way down here, I will take a long position, right? Like this. So what I'm looking to see, I'm not even looking for it. I actually wish that it doesn't happen. And if it does happen, I've got to take the trade. But that's for another video, being the anti-trader, right? But like price moves in a strong way, we're going to see a pullback. And in this case, my pullback is going to be to here. Excuse me. At least that's what I'm looking for. Why am I looking for that? Because that is the first area in which I think price is going to struggle. We're going to come into what I call like traffic. Okay. So how am I identifying that? Well, there's clearly stuff going on within these wicks here, right? Price is getting like this, a problem with price just moving through this in a straight line. It's not, price isn't just doing that. So we've got a problem there, and that's where I think price is going to struggle. And so it just so happened that we had this nice sell-off And then boom, really aggressively selling off down into here. We did actually react off a 1 hour level. I'll show you this real quick. Candle body close just here. About 100 pips of drawdown, or just under that, 94-ish. But the level held as I thought it would, because we were pretty much at average true range. My entry was a little bit before that. I do prefer to see gold on the other side of average true range, meaning I wanted to see it like super overextended, just because it is quite volatile. But again, very subdued market conditions. We didn't have a lot on the calendar, and therefore I was like, you know what? If price got all the way down there, we've had into the level, we've had a 356 pip move in, which is quite good for gold. And so, yeah, I held on to that one. And then we got the pullback the next day, I believe, or later in the evening. So that was the gold trade. Standard stuff, guys, like strong move in to a level. That's it. And then a pullback, because profit taking is occurring right here. You cannot just hold a position all the way. Like traders can't hold this position all the way down to here and not take into consideration that this is a level where people are going to mitigate risk, right? They're going to take something off the table. Price might continue down here, but it's not just going to continue in a straight line. Something has to be taken at that point. Otherwise, someone on the trading floor is going to get a slap, right? And that's the idea. Just checking the comments, see if you guys have got anything to say. Yeah, UG, you had the same trade on dollar yen. Sweet, I know you did. I know you love those yen pairs. Seen some good trades from you this week as well. Good stuff. Hello to Jan. Good to have you on, man. So yeah, that was the gold trade. Simple stuff. I had the same trade on $500. When I say the same trade, I saw the same thing. Let's check this out. So pretty much same timing. Now we're still on the market replay here, so it is the same timing. This was Wednesday, the 3 o'clock, 4 hour candle body candle. Let's just see when it actually started moving here. I believe it's from the morning, but then things got a bit more aggressive along towards 5 p.m. and we saw the drop. So stocks were on the back foot most of the day. 4 hour candle body close. Check it out, guys. Like this is the candle body close that I was looking at that day. So let's rewind price again, and I'll just explain why this becomes interesting. So if we rewind price back here, ignore where this green line is. That is my potential profit area. Why? Because I'm expecting that if price got all the way down here, then when it comes back up, these lows here, that's going to be some kind of traffic that price is going to come into. So I've set my first area of potential struggle just before that to ensure that I'm going to take my profits off the table. Okay, that's it. So that's how I'm looking to play this. Now, if we play price forward, I go on the 1 hour time frame here. So we know where my level is. It's all the way down here. Price would have to move quite a long way and be overextended to get down there. And if I see a nice strong move in, I'm going to take the trade in the opposite direction. So here we go. Boom, there we go. Price, decent move in. I mean, when I say decent move in, sharp move down. This didn't take forever to get into. We're talking about a few hours. Price really moved past. And here is where average true range is on the chart. Let me just flick it on and off so you can see. Right? So price is overextended. We've hit a level, which is defined over here. This is where price had a really nice reaction before. We moved off it in a strong way. So we're going to see a nice reaction there. Excuse me. And that's what we got. So there's me sitting here ready to take a trade in the opposite direction. I had the same trade on the UK 100 the previous week. Back here. Same thing. Strong move into the level. Price overextended. What happened? I took a trade in the opposite direction. That's all we're doing, folks. It's not difficult, all right? We just make it difficult for ourselves. I'm not some guru telling you right now that this is like crazy difficult to do and you need to buy my $5 million course where you're never going to be able to speak to me. And all you need to do is, watch 4 hours of my content and you too will be a trading genius god. Like that is not what we're doing here. I'm teaching you everything that I do. It does not need to be over complicated. You will come, you will learn, you will implement, you will wobble, you will be affected by all the things that other people are telling you that make you think that it's more difficult than it needs to be. You will have self-doubt, a limiting belief, a lack of belief in what I say, a lack of belief in yourself. These are all the things that will slow you down. But at some point, you'll just get out of your own way and you'll be like, geez, I wish I listened to James earlier. And I know that's the truth because it's the same conversation I would have had with myself. It's the same things I hear from people who have been in the group with me the longest. And yeah, I can see Yuji's agreeing with me here in the comments. Yuji's had many good conversations with him about things that he was thinking about doing and that I stopped him from doing, and he knows that now he's protected. Sana, in what point I have to get worried that now the price gets too much the wrong way? So you're talking about drawdown. Well, that's for you to decide ahead of taking the trade. So, for example, in this case, let's have a look at realistically my US 500 trade. So ahead of knowing where price is going to react from, right? But I do know where price is going to react from because it has to react from the area in which it gets to that day. So I have to include these wicks here, right? These wicks are potential drawdown opportunities, right? And maybe even this wick over here. So I'm going to draw out a zone. And I don't do this on everything. I just eyeball it, right? But I know that if price really breaches past this, I'm going to be taking a backup level here. Now, here's the thing, guys. Here's the real kicker and why this stuff works so good is because it's contextual. I'm only looking to take this trade here from this level right here if I see a strong move into it in that day and price moves past its average true range for the day. Average true range is a daily indicator. If price doesn't get here today, this level becomes less interesting to me. Now, if price gets to my level today, which already would surprise me, right? I'm now not wanting to get involved in the market unless price gets to here today. This is what I'm thinking in the morning. If price gets here, I will be surprised and I will have to take the trade because it's a high probability setup. Now, if I'm wrong, okay? First of all, I've waited the longest to get involved in this. It means price has to smash past this level in the day too, right? There is a level before, and I love it when I see this. Because the narrative I tell myself is that this is where other traders are going to get involved, and I'm just going to watch them fail, and then I'll pick up their money, right? That's what I'm looking to do. Why? Because I'm being the most patient. The patience pays in trading. The more patient you are, the more money you make. Or let's say, the more right you are more often. So if this level gets smashed, this level is likely to work. If this level does not work, I've got this level below. So if this level fails, then I have to conclude that my trading idea sucked and I'm now wrong. And that's how I think about it. I think that everything that I do, I think of in probabilities. I don't think of like whether I'm right or wrong. I think about like how probable something is. Like, how probable is it that I'll get hit by a bus tomorrow? Was pretty unlikely, right? It could happen, but it's unlikely. So that's what will be your friend when trading. That's why I talk about building your confidence. That's why I talk about tracking your trades, because you will realize that over time, well, put it this way, when you start, or when people start and they go through leveled effects, I see them putting like levels in places that I don't think we're even going to get to this year, right? But it's normal that you would do that because you have no idea of like how price moves and how far it will move in a given day. Average true range indicator will help you identify that in a better way. But ultimately, over time, you're just going to pick up which is better and how to choose that much quicker. And this is one of those perfect scenarios. Like if price breached this on the US 500, we would have to have some kind of like black day that day for all markets to be crashing. All markets did crash that day. The US 30 did the same thing as well. So I had this level marked up. If we play price forward, the level did have a reaction on the US 30, but it didn't hold as well as the US 500 at the time. But it did do its pullback. If you consider this to be the first area of potential struggle, this wick over here, price came down, and we did actually have the reaction up to there before price dropped lower. So, yeah. Guys, I'm going to very quickly run through the last trades that I have, and then I'm going to wrap things up because I have got to go literally at 6 p.m. on the dot. Pound dollar short on the Thursday. Let me show you this. Pound to the dollar short. This one was real simple as well. We had a very subdued day. It was a pretty subdued week, actually. A candle body close here on the 4-hour candle. We had this strong move up on the pound here. That's what we were looking to trade. Price hit the level, and literally we had the pullback to the first area of potential struggle as identified by this green line on my chart here. That's it. Literally, there's the move in, there's the move out. Simple stuff. EURCAD short. This was the same day. Bit later in the day, this one. Let's have a look. So we got EURCAD. Look at this move in. Strong move in. Let's go to the 4-hour. You can see right here. 4-hour candle body close. Beautiful move in. Price overextended. That's what we got. And we got our pullback. Beautiful. Pound CAD short. Here we go. Same stuff. Candle body close. Strong move in. And we got the pullback. And we're looking at just here, right, on the Thursday. So this was price being overextended. We saw the price get up, and then we saw price pull back. That's literally it. So, guys, if anything that I've said here today isn't confusing in any way, you can always come and join Leveled FX. It's school.com/leveledfx. Everything in there is free. You can learn everything at your own pace. There's a community there to help you as well. Yeah, that's literally the best advice I can give you. I will be there to help you as well if you need that. Q&A, Sana, I will say you said, and was it so that you will not stop the trade and take new backup, but you let it go to your next level? So yeah, if that's about the drawdown, so let me just hop back to that because I missed your question at the time. US 500. So yeah, if price was to breach that level and we were to breach all the way down to here, I wouldn't necessarily hold all the way down. And it depends. Like on my personal account, yes, I probably would, because I am trading it with lower risk. The funded accounts that I have, I would probably take a smaller loss and then wait for the pushback the other way. The main thing is to identify the driver. Like if you don't know what's driving price, you're going to be more uncertain about whether or not you should hold that trade all the way down. The worst thing that you can see is if price is drawing down against you, but you haven't seen any reason for your trade to fail yet, meaning that the driver is still in play and you should get the pullback. So you don't want to take the loss here and then price to pull back in the opposite direction already. So that's the kicker, right? So in answer to your question, it depends. And it's kind of outside the context of or the scope of what I can deliver in this live stream. But yeah, you can choose whether you're going to hold price all the way down to here. The classic is to let price come all the way down, take a bigger position on the second entry, and then ride it back to your initial entry, close your first trade at break even, and take your profits on the second entry. That's the best way that you can do that. Sushi o'clock. Thank you. Yes, David, it's sushi o'clock. I can hear the whole family are back in the house as well. So these are 4 children under the age of, well, let's say 5 children under the age of 10. So it's about to get very, very chaotic in here. Quickly looking at the week ahead, I'll just say this. It will be a very subdued Monday, Tuesday. Wednesday, Thursday, things are going to get more manic. And then on Friday, we've got NFP. And NFP will move the markets like you won't believe. So just be prepared for that. But for those of you that are in the community, you know the drill. Every morning is going to be a case of looking at the day ahead, making sure that we've given our best expectations for what we are likely to see in the market. You will know whether you're going to experience subdued or volatile market conditions. If it's subdued, you can take the levels. If we're going to see more volatility, just wait a bit longer and only trade the stronger levels, and that's it. So yeah, any questions? For those of you rewatching the video as well, pop them in the comments below, and I'll happily answer anything that you need. But the best thing you can do, especially to get my attention, is to join the community, Leveled FX. It's school.com/leveledfx. And within that, hey RT, how are we doing? Do you want to come and be on my video? You left something there, did you? Yeah. All right. So nobody wants to be in the video? I want to be in the video. All right, Laura, you come around and be in the video then. Come around and be in the video. We're just wrapping things up. Say hello to everybody.
Hello.
There he is. There's trouble. Right, guys, as you can see, I got to get out of here. So I will see you on the next one. But if you haven't done already, get inside the community. It's school.com/levelfx. See you later.